Well, what a way to start the week. The rally started overseas for stocks, and when the opening bell rang here on Wall Street, stocks took off and didn't look back. The reason, what some investors considered a worst-case scenario in the French election, didn't happen. True, a far-right anti-European Union candidate will move into the contest's final round in 2 weeks. But her competition and the current favorite to win is a pro-business, Euro-friendly centrist and not a far-left flamethrower. More on the French election in a moment. The markets liked that outcome, and investors plowed money big time into riskier assets like equities and pulled it out of safer ones like gold and government bonds. Here are the day's numbers. The Dow Jones Industrial Average climbed 216 points to 20,763. Nasdaq hit a record, up 73 points, and the S&P 500 added 25. But before you breathe a big sigh of relief, the market still faces some big hurdles. Here's Bob Pisani.
Are market risks declining? You'd think so, watching the market reaction to the French election. Risks may be lower, but they're not going away. Here's 4 major market risks. First, geopolitical. It's definitely lower. The markets are telling us that there was some risk associated with the French elections. The risks are lower, but with North Korea looming as a threat, geopolitical risk is still very much present. Second, weaker economic data. Still high risk to the markets, my opinion. We're expecting anemic first quarter GDP growth of 1.1%. Other measures of hard economic news have generally been weaker, like retail sales. Now, the bulls are insisting that first quarter economic data has been weak for several years, and the second quarter will show some improvement. We'll see. Third is the high valuation of the stock market and the risk from disappointing earnings. That risk was high, but it's lower now. So far, the earnings news has been good. First banks, now industrials, generally reporting earnings above expectations. And a half dozen large industrial names not only beat earnings, but they raised full-year guidance. Finally, there's still a risk that fiscal reforms will not be working and will be pushed out. President Trump's tax comment last week that a massive tax bill was coming this week is falling short, obviously. We now know there's only going to be a statement of principles by Wednesday. Well, we already know the principles, but we need the details. The bottom line here is there's still plenty of risk for stocks, but the atmosphere is definitely improving. For Nightly Business Report, I'm Bob Pisani at the New York Stock Exchange.